My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we're going to be talking about impact investing, and our special guest today is Michael McLean, and he is from Condor Partners. He's zooming in from beautiful Chicago, Illinois, and we're going to find out what is impact investing. I mean, I've heard this term before. I've got an idea of what it means, but Michael's going to give us a full-fledged explanation of what they do and how they do it. So Michael, welcome to the show. Great to have you.
Great. Thank you for having me.
Well, Michael, we're getting towards the middle of 2025 already. My God, time flies, whether or not you're having fun or not. But so maybe let's zoom out for a second. Give us a snapshot. What do you guys do at Condor Partners? What is your buy box or your build box? What do things look like mid 2025 right now?
Yes, so we are Chicago centric developers, investors, and consultants. We do direct development and investment ourselves, primarily in the Chicago metro area, but we've worked all over the country in the past. We all have kids and we choose not to travel as much as we used to. But we have a significant presence in New York and the New York metro area as well, with my brother's company, who's a massive development company out there. So we do all kinds of property types, and impact investment kind of has a foundation that we build off of, while some groups prefer a certain sector, right? Like retail or office or multifamily. We say that we'll become experts in our location, and then the location will tell us what it wants to be.
Okay. So maybe give me well, first, before we get into that, do you guys just do development, or do you end up holding some of these properties as investments yourselves, or what's the exit strategy?
We primarily do focus on development. And whether or not we hold those properties long-term or short-term or mid-term really depends on the type of money we raise to finance the projects, as well as the market conditions, because that is really what most dictates the length of our hold period.
Okay, so what are you guys holding?
Returns for the investors.
Okay.
So sometimes we have to transact, and sometimes we don't want to.
Okay, so as it stands right now, just to give us kind of an idea, how many finished projects do you guys have that you're holding on to at the moment, and how many are kind of in process in the development process?
So we probably have 4 or 5 substantial assets that we currently have. We have a $60 million office project that we developed and just did a discounted payoff to be able to keep. Okay. In Chicago, we built a $75 million ground up luxury assisted living in 2021 in Evanston. We have a management company in that, and AEW is a big fund out of Boston, is our partner. We're holding on to that for now because the market conditions just aren't right. We have a large mixed use project in St. Louis. It's about a $60 million asset with retail, residential, and office, as well as parking and car charging. Believe it or not, that's an asset nowadays.
Yeah, I believe it.
And then we have a handful of development deals that we're out to the markets to finance to start construction. So we're a very small firm. We do large projects with a few people, but it allows us to keep principals directly on those projects and really look out for our investors' money. And make sure that we don't have junior people running $50 million projects.
Good idea.
We have principals running those projects.
So Michael, let's dive into the impact investing. Forgive me because I kind of interrupted you to get the snapshot, but so to me, it sounds like you're not tied to any particular class of development. It's more about where the property is and what the needs are of the community. So maybe
Yep.
unpack that
So
for me. Give me an example, if you would.
what we recognize that the investments that we make will affect the way a generation sees the world, right?
Hmm.
So when we go into a new community, we take the time to get to know the community first. And by doing so, we're informed and better informed than many of our competitors on what's happening, what the dynamics are, what the real needs are, what the real risks are, so that then we can craft a project around those dynamics. What is the politics? What is the financial capability? What is the market? What's in the pipeline? What's not in the pipeline?
So
Um,
this is before you've even got a property
before we've
in
even got a
mind.
property, and our project in Pilsen, Chicago, it's a neighborhood of Chicago. It doesn't have a lot of office space, but we spent 2 years getting to know the community in that neighborhood.
So what does that even mean, getting to know the community? What does that look
Well,
like?
we introduce ourselves to the major stakeholders. We introduce ourselves to the major institutions that might be there. We work in Chicago. It's a very aldermanic centric
Hmm.
government. So we work directly with the aldermen, the council members to really understand what's happening. And we bought two buildings that were being threatened to become residential conversions, and that which would have further gentrification processes that are threatening the culture of this neighborhood. And
Hmm.
we learned from anti-development organizations that one of the big issues in that neighborhood is 12,000 out of 13,000 workers leave to go to work every day. Right? That's why the local shops were closing down. That's why the lunch places were closing down. People were taking their money and they were spending it somewhere else in Chicago.
Yeah, downtown Chicago. Yeah.
So we said,
Yeah.
well, let's focus on office and bring jobs back to this community that have lost so
Oh.
many jobs. The result was an incredibly resilient project. I mean, out of 200,000 vacant square feet of office space that we had going into the pandemic, we leased 150,000 square feet of it since it began. Um, and
Which so give us a time frame.
so
When did
I
you
signed a 100,000 square foot lease with HCSC, the parent of Blue Cross Blue Shield, in June of 2020.
wow.
I signed another 15,000 square foot lease, office lease, right? And I just installed the tenant after about a year of permits and build out and whatnot, last month. So we had two other tenants move in the meantime in late 2020, early 2021. Um, the reason was because the project was anchored with the right principles and the right economics to be able to compete with larger office properties that didn't offer air, light, parking, and culture, which we had out our front door. Plus, these are 120-year-old buildings. They're heavy timber and brick buildings. They're really attractive. They really speak to the authenticity that young workers are looking for in today's
So
environment.
help me with this. That sounds amazing, Michaels, but let's go back to the beginning of that project.
Yeah.
So you'd spent a couple of years kind of poking around, getting to know the stakeholders and the people and what the issue was. Then how did you find this property and then what did you do with it to
So,
that the
so
previous owners weren't doing to attract these
there
really
was
big
a previous owner had the property. They were trying to get one of them um, uh, entitled to be a high-end a luxury residential rental property. And the
gentrifying the thing?
community was
Yeah.
dead set against it, and they
Mm.
fought them for years. The developer gave up, didn't want to continue, didn't necessarily see or wasn't necessarily interested in pursuing a commercial use for the building. And we stepped in and with this vision of making a new office district.
What had it been before? What was in there
It
before?
was it was part of the largest lumber warehousing facility in the world in 1900.
Wow.
Um, there were 400,000 square foot buildings. The rail came right into the building, and they loaded doors and windows and hardware onto the trains and shipped them all over the country.
And how long had it been kind of
This building had
decommissioned?
been vacant for at least a decade.
Wow.
That
Wow.
after before we bought it. The other
So,
building, its sister building, which makes up the whole complex, had been vacant for almost 2 decades.
wow. So I can only begin to imagine what it took for you guys to redevelop that and keep that vibe and that feel, that 100+ year old feel to it. So, without getting into too much detail, Michael, what did you guys do to it to make it attractive for these tenants that you got into?
They were dock high, meaning they were raised floor plans on the first floor so that you could back a truck right up to them.
Right.
So we actually spent a fortune dropping that floor to ground level and then getting rid of the brick wall that you couldn't see through and creating a big glass box that became our oversized lobby to make that third place that both the community and the office workers or the future office workers could come down to. And then we went out and found a local coffee roaster that will be moving in, delayed with the pandemic, and a local brewery that
Okay.
is currently under construction that's moving in, also delayed from the pandemic, but finally realizing the vision of getting these local retail food service into our lobby so that it could really become a public-private entity to embrace that community. And
Very
it's really
cool.
the heart of what we're trying to do with the project.
So at this point, you've leased out 150,000 of, what did you say,
So
400,000 square feet?
200,000.
200. Okay, well, you're 75%,
Yes.
over 75% there.
Yeah.
What impact, speaking of impact investing, has that had on the local community? Because they're up so much up in arms against gentrifying this. So, like, are you seeing new little businesses popping up to cater to this? How many employees
So
does this represent?
not so the employee counts in the buildings are still somewhat low, right?
Okay.
Chicago, like many cities, is still working through um the back to office, dynamics,
Okay.
right?
Yeah.
But what we are seeing is more and more companies looking for us and looking for the neighborhood.
Hmm.
So what ended up happening is we ended up connecting with companies and not-for-profits that actually wanted to be part of this community. And therefore they're moving their offices there, they're moving their employees there, but their employees already live there or
Ah,
what they do already services the residents of the community.
what's an example of that?
So One Hope United is a family services not-for-profit that's been in Chicago for, I think, 140 years. They picked up and they moved to this building in order to be connected with the people that they serve and the people who work for them.
Hmm.
Um, and it's a great story. It's 15,000 feet. It's 80 people in an office space, and it's brand new. So it furthers their mission just by being a part of this
Yeah.
project, furthers their critical mass and their storyline and their connection to what they've been doing for so long.
Oh, that's very exciting. Well, now I got a much better idea of what impact investing means. Uh, we don't have a heck of a lot of time, but do you have another example? That was an amazing example, but
So
maybe in a
yeah,
different
so here's a
different area.
completely opposite example in
Okay.
Evanston, Illinois, right? We're in downtown Evanston. It's a high-end community. We built as a luxury, an assisted living building as possible. This is marble floors and countertops and full service environment. We can cook I think 600 meals a day out of our commercial kitchen in the building. It's a nine-story luxury building, and it's for people who need assistance in daily activities, right? Not a
How
lot.
many how many guests or
So we've
patients or
so
clients do
we've
you
got
have in?
160 rooms,
Got it.
160
160.
apartments,
Yeah.
and they're full-size apartments, and there's two people, the husband and wives and
Mhm.
couples and roommates and all that. So we can hold probably around 190 to 200 people is probably where we'll finish out. Where I think
Mhm.
we're at 170 now at 94% occupancy.
Nice.
Um, so that we can't contribute to affordable housing, although we paid into an affordable housing fund as part of our public benefits. But what we said was that we're going to have this big building full of local residents that are spending a lot to live the best life that they can at this age in this location. What can we do with that? And what we
Mhm.
did was we made a commitment to hire locally. So we have 50 employees of Evanston hired we're one of the larger on-site employers in downtown Evanston,
I
right?
believe it.
So we're bringing out of 100 employees we have, 50 of them are from directly from the neighborhood, that can walk to work, that can bike to work, they don't have to drive. And as a result, we have this amazing community tie-in, and it's with people that, were from different sides of town that may never have communicated before, but we're able to give on-the-job training. Like we're working with a high school who now is pushing a vocational training for registered nurses, and really building our workforce development processes within the resources of a building that needed these people anyway, right?
Yeah.
We could have built an apartment building, had 2 employees, and been done with it, right? What we decided to do is focus a little bit more locally and responsibly and build that impact in to create a better product, a better project. And when you have people that live near a property, they can walk by and say, "Hey, I work there,"
Yeah.
right? And it makes a big difference when they showing up to work and putting in that right effort and putting in the culture that you need for a property of that size and that nature.
So do you find with this approach with impact investing that you attract a different kind of partner, a different kind of investor who works with you guys that this is important to?
So I do think that some investors do find it important and some don't. I mean, to be
Mm.
honest with you, many do brush it aside as, really not important, right? I need to
As
know,
long as you're getting them the returns they
yeah,
want,
what's my
they don't really care.
NOI, what's my ROI, what's my IRR? Those are the questions I have to answer. And I always have to answer those
Yeah.
questions. But what we are proving now is that what we're doing is more resilient,
Mm.
right? More resilient. We opened the doors for this property in October of 2021. There wasn't a worse time for senior housing in the history of senior housing, right? And within a year, we were 80% occupied, and we are now 94% occupied. And that is not just because it's a gorgeous building, right? It's
What are the other soft reasons, or not really
it,
soft, but you know what I
it's
mean?
because we're connected with the community.
Hmm.
People all over town talk about this building as one of the most beautiful buildings, the most cutting edge buildings. But most often, it's about the culture of the people who work there.
Mm.
And again, they live there. So there's a sense of pride in working in a building like this and providing services in a building like this, that is intangible, but yet outperforms our competitors in some way, right? And can you quantify that in a dollar amount? Probably, maybe.
Yeah, it's tough though. Yeah. Well,
I can certainly quantify it in the office project. In this project, maybe a little less tangible, but it's the same thing with hotels. And it's the same thing, like we hire local security company at the office project to make sure that person's walking to work and they know the person around the corner that runs the restaurant. And they like, there's an engagement level there that real estate is local, right?
yeah.
It's always been local, and we forget about it and we pretend it's a widget and we buy and trade and sell. And, and that's where things go off the rails. When you forget to like just invest that bit of time into understanding the block you're on, the neighborhood you're in, the school district you're in, who these people are that have to live with what you're doing,
Yeah.
right? Um,
Well, it's interesting. I was checking out your bio ahead of time, Michael, and you've got a background in sociology, if I'm not mistaken.
I
So
do.
this is kind of cool because it's one of those rare cases where your undergrad degree directly, especially it's like I've got an
I,
undergrad in psychology. I've
yeah.
basically never used it, but you are using it in real estate.
Yes, I am. And
Yeah.
I didn't get that degree to be in real
Yeah.
estate,
Yeah.
but I grew up in construction and around real estate. And the more I learned through the sociology study of people and how we interact with our world and each other, the more I got excited about how real estate could do that. And it really is just this wonderfully intangible thing that finance people can miss,
Yeah.
right? Because I'm trained somewhat to go out and look for these things. it's hard to prove out that it's worth doing.
Mm.
But when, you're signing tenants in pandemics, right? When the office market is 60% vacant and you're still doing build outs, like something's different there.
Yeah,
And, I think that's really where that difference comes from.
most definitely. Michael, this has been fascinating. So thanks so much for sharing what you guys are up to. I'm sure a lot of people listening or watching this would like to connect with you. How should they do that?
I'm very active on LinkedIn. I love meeting new people on there. I almost always follow up and try and find out who people are and see if there are synergies. So, my LinkedIn account is a perfect way to get a hold of me.
So if people are listening to this and they don't have a chance to check out the show notes, how can they find you on LinkedIn? What should they look for? What should they type in?
Michael McLean Condor Partners.
There you go. That'll do it. Awesome. Well, Michael, thanks very much for being on the show. And everybody, thanks for tuning in.
Thank you.
Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.